Good. I'm sure those links work. If for some reason they don't, let me know in the chat. 12:01, let's get started. Good afternoon, everybody. My name is Sarah Metzger, and I'm a financial educator and one of the assistant directors at the Penn State Sokolov-Miller Family Financial and Life Skills Center. We're based up here at University Park campus, but we serve all Penn State students, current and graduated, as well as staff and faculty, which in looking at the registration report, we've got a little bit of everybody here. We even have a couple of Penn State parents. So thanks so much for representing and getting connected with our office. We are here to serve in a variety of capacities. Today, we'll talk about insurance, which is really exciting. It's a topic we have not held in webinar form for quite some time. So it's nice to kind of dust this off and give it another go and see how things play out today. Before we get started, though, I do just want to note a couple of quick things. Today's session is being recorded. The recording will be uploaded to our YouTube page, which I linked in the chat earlier. If you don't have that link, you can always go to YouTube and just search up our office name. There is no other Sokolov-Miller Family Financial and Life Skills Center, so you will find our YouTube page with this webinar recorded as well as all of our previous recordings. So please take a look at that, especially if you need to leave early from the call. Don't be shy. I understand we are all very busy. If you have questions as we move along in today's content, which I'm sure you will, given it's about insurance and it's a little bit of a mystery at times, feel free to use the Q&A. There's an anonymous feature, so if you want to use the Q&A and submit your questions, you can. You can upvote and add comments in that space as well. Which I would encourage you to use over the chat simply because I'm going to be sending some links through the chat and I don't want it to get too messy in there. So let's try and use that Q&A, but do look at the chat because those resources are going to come through. I'm going to have a feedback survey at the end of today's session. We'd love to hear what you thought about today's topic since this is a reintroduction of insurance in the first time in a long time. And then one final note, if you are tuning in from SMEAL's Ethical Leadership Challenge, you will get credit automatically for your participation in today's webinar when we send your registration information over to the program managers in SMEAL. So you don't need to worry about a QR code or taking any action. You're just going to sit back, relax, and receive all of this good information about what it takes to properly insure your future. So without further ado, I'm going to take us into a game. Okay, this is really exciting. What better way to start talking about insurance than with something fun and exciting? The game is called, Oh No, You're Ruined. It's a really quick game we're going to play about avoiding financial disaster. It's going to require you to use your chat. So if you don't have your chat open, please get that chat open. I want to see a lot of participation here. I'm going to give us a minute and 30 seconds to go through a couple of examples of potential financial disasters. And the way that you win this game is if you can correctly identify the type of insurance that would save the day in each of these financial disasters. So we're just going to kind of run through this really quick. Are we ready? Can somebody, let's do this. Somebody give me a message in the chat. Let me know that your chat is working before I start the timer and kick us off. Yo, yo, yo. All right. Yeah, we got thumbs up. Clara, thank you. Okay, we are ready. All right. On your mark, get set, and you can just type your answers in the chat. Let's go. You sneezed and threw out your back permanently. Yes, health insurance. What else? What else though? Come on. There's 2 insurance types here that you'd want to lean on. Health medical insurance. Oh, I saw it. Oh, where'd it go? It came through. I saw disability. All right, excellent. Points for all of you on that one. Let's go to the next. Cat knocked over candle, set curtains on fire. Cat is unbothered. Yes, homeowners or renters. Excellent. Oh, you guys are great. Okay, let's keep going. Let's keep going. Dog ate AirPods. Barks in stereo now. What's helping us out here? Yes. Okay, pet insurance. Yes, those AirPods might be a loss at this point, though. Sorry about that. Next, deer hit you. You were parked. Ah, yes, auto car. Can somebody specifically indicate what type? Not collision, but you're close. It's one of those optional insurance coverages we can. There we go. Joshua got it. Comprehensive car insurance is going to cover that. Good. Phone fell in the toilet. Now it's texting your ex. What's going to help us out in this scenario? Besides maybe just, having a time machine. Yeah. Phone, Apple Care, phone insurance, something you get from your cell phone provider. There we go. Good stuff. All right. Bought concert tickets. Band broke up yesterday. And don't worry about the timer. You guys are doing great. Yes. What's going to cover you in this scenario? If you've ever bought tickets on Ticketmaster or StubHub, maybe not StubHub, but definitely Ticketmaster, you're going to see this insurance option. Okay, good. I see event coming through. Excellent. Luggage went on vacation. You didn't. What insurance is going to happen or take care of us here? Good. Travel. Travel insurance. Okay, 2 more. Kid flushed your keys. Car, house, sanity, gone. Let's say you're at Target. Your car's out in the parking lot. What's going to help you out in this scenario? Can't get into your car. Can't get into your house. Yeah, AAA, that roadside assistance built into auto insurance occasionally. Yeah, excellent. And then finally, I want you to use your imagination here. You reached under the lawnmower to see what was making that noise. Yeah, we're gonna use these clues and make some inferences about what happened here and what type of insurance we'll probably need. Health insurance, definitely. There's a secondary insurance here that we probably would like to have coverage on before something like this would happen. Yeah. Some of y'all I think are getting at it. I see accident coming up. Does anybody know the more official title? Maybe short-term disability. Yeah. I'm thinking of another one. Penn State offers it for all of my Penn State staff and faculty in the call here today. Okay. Yes. Okay. Oh, I saw it come through. Yes. Accidental death and dismemberment. Woo! All right. Go ahead and give yourself a round of applause. That was great. I'm very impressed with your knowledge of insurance thus far. And I think that was a fun way of starting a conversation around a topic in personal finance that can sometimes be a little dry, which we're going to try to not make it be that today. So kudos to all of you for your participation and for those correct answers. I love to see it. Now, to be clear, as we dive into the content, misfortunes like the ones you just saw on the screen certainly are going to set us back towards this journey to financial wellness that we're all on in life. To be sure, financial wellness is not just about being rich or having perfect credits, a perfect credit score, or a high income, a high salary. Those things are helpful, but like when we really talk about financial wellness at the office, and we frame the conversation for each webinar, we're talking about stability, that security and freedom of choice with our finances. You're able to get bills paid, you're on track with short and long-term goals, you're able to go out on the weekends, and you're ready for those rainy days. Insurance is a really key tool that helps you absorb shocks, unexpected expenses, and maintain your overall financial wellness. So there's a lot that we can do to really kind of shine in each of these 4 quadrants. Insurance is almost, in some cases, it's required by law, but is going to be a really helpful tool in making sure that when the unexpected happens, when your dog eats your AirPods or when your cat accidentally sets your curtains on fire, that you are prepared for that unexpected and probably expensive cost, and you're not going to have to like fall backwards in this journey you're on, or like tap into savings or income sources that were not otherwise meant for those really major catastrophes, right? So let's get at it then. With that in mind, I'm going to share with you a process. I'm going to share with you key steps in the process to planning to ensure your future. Um, and to be clear, like if this is your first rodeo with insurance, picking insurance is not just about randomly selecting an insurance policy. It is a thoughtful, multi step process designed to protect you financially when those unexpected things happen. So, here's what we're going to break down today. We're going to talk about factors in life that you should consider when determining what type of insurance policies to procure and how much in coverage you might need. We're also going to look at different types of insurance coverage. So, auto, home, renters, health, life. There's travel, there's pet, there's business, and more. I frankly do not have enough time to cover all the different types of insurance that exist out there. But I'm going to hit some of the big players in the insurance industry and what a lot of folks here in the U.S. obtain coverage on, just because it is like so integral to our lives and like everyday activities as people. And then we're going to talk about what it means to transfer risk from an individual to a company. That's actually like how you go about obtaining insurance coverage for yourself. So instead of you having to shoulder all of the risk when your cat sets the curtains on fire, or you know, reach your hand under the lawnmower, even though that was definitely a risk you took, when you have insurance, you're shifting that risk from yourself, that risk of having to pay really big money out of pocket to deal with the emergency. You're shifting that from yourself to the insurance company. So we'll kind of break down what's happening in that space. And then finally, we'll talk about how to put insurance to work and recover from loss, file a claim, and get reimbursed for those expenses when the misfortune strikes. Okay. So as a reminder, you've got access to the Q&A. If you've got questions, drop them in there. That'll keep the chat nice and clean so that I am able to drop in some helpful links to you all and they won't get lost in the muck of things, okay? So let us get started. Oh, and oh my gosh, how could I almost forget to say this? Like, why does this process matter? My apologies. Got to make my point clear before we jump in. If you do not engage in a systematic approach to planning for insurance, researching insurance, you risk a couple of things happening: being underinsured, potentially being overinsured, and paying more for insurance than you actually need, or finding out too late that you're not covered at all when something like a misfortune happens. It is a tool, again, that we use to secure our financial futures. It is going to help you recover when life throws curveballs. And like the really unfortunate thing about life and misfortune is these emergencies, they never announce themselves. So we have to be prepared. Starting first with knowing ourselves and what kind of factors in life influence the type of insurance coverage we need, and how much of it. Okay, so let's talk about how to assess what is going to be right for you. Your situation is unique, so your insurance should reflect that. I've got folks in this call who are young college students and undergrad. I know I've also got staff and faculty who are probably nearing retirement. So we've got a wide variety of ages and stages in life, and these types of variables are going to influence the kind of insurance coverage you need. So consider things like your age, your gender, your current health status. We also have to think, potentially in the future where we don't have a crystal ball and we can't know exactly what's going to happen. But, I'm someone who comes from a family with a lot of cancer. I've had a lot of sick relatives. I did not win the genetic lottery in that way. And so, even if I'm not sick now, I am planning for future Sarah and the potential that like future Sarah might have the same kind of ailments that have afflicted my family in times past. As it comes to age and health, we also know that, at least here in the US, the older you get, the more you typically spend in healthcare costs. And that's just part of getting older and our bodies maturing and things starting to break down, though we wish they wouldn't, right? But because of that, our expenses for healthcare, seeing physicians, going to the pharmacy, picking up scripts, getting stuff over the counter, it all starts to increase generally as we get older. And some of us, as we get older, will have children too, and we start to factor that in that kids need us to provide their care as well. And so we can expect those costs to rise. So we think about how these factors are influencing our need for insurance. We also consider our own level of risk tolerance. Some people are going to be more conservative. Some people are going to be less conservative. I tend to see myself as a more conservative individual. I also come from a family of people who worry and do the what ifs a lot. So be it. Whatever helps you sleep at night, if having a certain insurance coverage or a certain policy helps you sleep at night, then that's valid enough reason right there to obtain it. You're also going to want to be mindful of your assets. These are belongings that you want to make sure are protected. Home, a car or a couple of cars, expensive electronics, jewelry items. Like if something were to happen to these items and you'd want to get them replaced, I mean, I know right now that I wouldn't be able to replace my car fully out of pocket. I just paid it off. It's entirely my responsibility. And so having car insurance makes it possible that if something does happen to my car, my insurance will help kick in and get that car replaced if it was totaled, for example. Okay. So think about what you own and what it's worth to you and what you would expect to happen in a situation where that asset is destroyed or lost or damaged in some kind of way. You're also going to want to consider your profession. Um, I just read a most unfortunate article from the Washington Post that came out 2 days ago. I'm not sure if any of you also read this. I've actually got the link here, so I'll drop this in the chat if you're curious about reading it. But it was a look into a lumber company down in Phoenix City, Alabama. And the reporting, I mean, the headline was America's deadliest employer or workplace, something like that, right? Um, really not a great article to read if you're a little queasy in the stomach or you don't like to hear about, workplace accidents or workplace deaths. But some of the things that we do professionally put us at greater risk for something happening. And given these different types of jobs that we all will have or do have, we might want to adjust our insurance coverage based on that. Um, so, for example, one of my colleagues used to work in a factory. At the time, she had accidental death and dismemberment coverage because she was working around heavy machinery, and that was important to her. That she felt like in that particular environment, it was a little bit risky for her that something could happen, and having accidental death and dismemberment insurance coverage would guarantee that if something did happen to her, there'd be a monetary payout to help compensate or pay for those medical bills or other related costs. So consider your profession. And then finally, consider family and economic status. If you are, I've got undergrads in the call, if you are a single young undergraduate student who's renting off campus and maybe has some insurance coverage still through your family, your insurance needs are going to be different from somebody who is older in their 40s, married with 3 children, has a dog or a couple of pets, has a home and a greater household income that they're working with. Um, I can't really stress enough that at the end of the day, your economic status, your ability to afford and pay for these different types of insurance plans is going to be a key, one of the key factors in determining whether or not you obtain coverage or the kind of quality of or amount of coverage that you have through any given plan. I'll talk more about this at the end, but we're discussing insurance today. This is an element of personal finance, but it's not happening in a vacuum. So, as you think about what type of insurance would help you sleep at night, what is most appropriate given your assets and lifestyle in life or your profession, that you make sure your budget can accommodate insurance payments. This is something that we have to pay for. We put a little bit of money into insurance, and in return, the benefit is when something happens, we can pull back from the money that we've contributed, as others have too, right across the whole company. All these people putting their money in the big bucket, we're able to tap into that. But if we don't have money to chip in, that insurance isn't going to be available to us. So budgeting matters in this space. Okay. All right. Now that said, let's get into the insurance types. We're going to start with auto insurance. And I'm going to tell you right now, between auto insurance, health insurance, life insurance, a couple of the key insurances I cover, this is going to be a lot of information. I'm trying to keep it as high level as I can because of time and because of your own sanity. I don't want to, overwhelm anybody. My recommendation to you is as I dive into this content, you maybe pick one or two insurance types that you're really curious about and like do your heavy focus in on those slides when I get to them. You're welcome to try and, absorb all of this at once, but if you're like me and in all of my preparation for today's webinar, I feel like I got to work this morning and I feel like suddenly everything I know about insurance, I don't because I dove, straight headfirst into it over the last couple of days, and it's a little overwhelming. So try to make it bite size. Okay. We're going to start first with auto insurance. So, auto insurance, if you drive a car, it is essential and it is, in most cases, required by law. I got a fun fact here. Let's see if anybody else knows this fun fact. 49 states require by law that drivers carry auto insurance. Can anybody guess which state does not have a law requiring drivers to carry auto insurance? There's one of them. Go to the chat and let's see if anybody's able to guess. Which state does not by law require drivers to carry auto insurance coverage? Some of you might be pulling up Google in another tab. Yeah. Oh, Karen, you got it. It is New Hampshire. Karen, you maybe are from New Hampshire or like the New England area. I feel like maybe that would be a bonus. You might know if you're from that area. I did not realize it was New Hampshire, but I'm also from the Midwest, and all the states in the Midwest require drivers to carry some level of car insurance. Ah, okay. You just knew somebody from New Hampshire. Interesting. Yeah. So, fun fact, you can, take that to dinner this weekend with your friends and tell them all about how 49 states require car insurance by law except for New Hampshire. Although New Hampshire does still have a financial responsibility expectation. So if you were at fault in an accident, you have to be able to prove financial responsibility that you can cover those costs. So I have a feeling, I didn't look this up, but I have a feeling most New Hampshire drivers probably have insurance anyways, just because it makes things a little bit easier. So let's hop on into this. We should shift to New Hampshire now. Yeah, I don't know why, because it's cheaper. We don't have to pay for the insurance there. I don't know. I feel like I'm that not so risky person, and it'd be dangerous if I was in New Hampshire without insurance. Okay. Anywho, let me get back into this. Okay. So on this slide, you're going to see a breakdown of bodily injury coverages offered through car insurance providers. Okay. I wish that car insurance was just like you have it or you don't. Like there's no one size fits all option. And honestly, it's probably for the better because our cars are all different. Our driving conditions or driving habits are all different. So, I get the value of having different options for different people. But let's kind of break these down. So, first, bodily injury coverages. Okay. These are going to be coverages that protect you financially when accidents result in injuries to you or your passengers or others involved in a car accident, for example. Okay. So, we're talking coverage for, potential medical expenses, legal liabilities, all the kind of stuff that could be overwhelming after an accident that we don't want to have to deal with in full. We want insurance to be able to help out here, right? So let's break it down. We've got bodily injury liability. This is going to cover costs if you're at fault in an accident and somebody else is injured. So that's going to help cover their medical bills, their legal fees, potential lost wages on their part. We've got medical payments coverage. So that's going to pay for medical expenses for you and your passengers, regardless of fault. So that is an additional piece of coverage that you can add to your car insurance. We also have uninsured or underinsured motorist protection. So in that case, if you are hit by a driver who doesn't have car insurance or has very little insurance, this can help to cover your costs in that case. I actually had that happen to me a couple years ago. I had just bought my new car and like a month later got rear-ended by an individual who did not have um, car insurance. And so I luckily had this protection, and so I was only out of pocket my deductible, which we'll talk about. But it saved me in that case. It saved the day because I had uninsured and underinsured motorist protection. Because it happens, people drive around without insurance, and we want to be prepared should we get into a car accident with them, right? And then we've got no fault or personal injury protection coverage. These generally go hand in hand with one another. This covers medical expenses, lost income, and other kinds of related costs, regardless of who's at fault. So some states are considered no fault states. In no fault states, drivers are going to be expected to have this personal injury protection. Um, and the idea is when there's no fault, there's no arguing. It's just your insurance will take care of you, their insurance will take care of them, and we'll all just kind of get back to normal. And the process will be smooth and seamless and much less of a headache than in other situations where we're arguing about who was at fault and insurance companies are fighting insurance companies and laws getting involved and yada, yada, yada. Okay. So if you're not from PA, check to see, or from wherever you are tuning in from, check to see if your state is considered a no fault state. I have on this screen a QR code that will take you to, if I can find it on my screen, will take you to a NerdWallet website. And that NerdWallet website is going to give you a list of all the states and their minimum insurance requirements. Okay. So what does that mean as I break this down a little bit further? I'll put my stars up there. At least in the state of Pennsylvania, it is required to have bodily injury liability and medical payments coverage as part of your car insurance. You do not need to have uninsured or underinsured motorist protection. That is considered optional. Okay. Now, certainly we'll talk more about costs later, but the more kind of coverage we add, generally the more expensive our insurance is going to be as we pay on a month to month or maybe a 6-month basis. So, for individuals who are trying to be really budget conscious in selecting car insurance, they may choose just to have the minimum state expectation. It goes beyond that. So, you see something come up at the bottom of my screen here. It says example coverage limits. As you pay for car insurance, you are going to opt into certain coverage limits. There's minimum requirements per state, but certainly you don't have to just have the minimum. You could have more coverage. So for example, with this bodily injury liability, you see 100, 350. This is how you're generally going to see coverage expressed in your insurance policy or when you're comparing insurance coverage or insurance plans across providers. This 100 represents $100,000 per person for bodily injury. So when somebody else gets hurt, per person, your insurance is going to pay out up to $100,000 in coverage. That 300 represents $300,000 per accident within this bodily injury, like if there's bodily injury sustained. And then the 50 we'll talk about on the next slide because the 50 does not relate to bodily injury coverages specifically. So if you see these numbers, and you're like, what is 100? What does 300 mean? What's 50 mean? I'm starting to break it down for you. Just fun facts here, and I have this written down so I don't forget it. In the state of PA, your minimum for bodily, so you've got your minimum insurance, bodily injury liability, and medical payments coverage. For bodily injury liability, your minimum coverage needs to be $15,000 per person, $30,000 per accident. And so because that's a lesser amount in coverage than the example you see on my screen, that's generally going to be a lesser expense or in terms of like cost to have the insurance. Okay. All right. I hope you're staying with me here. Like I said, pick one insurance type maybe just to focus on. Let me go to my Q&A as well. I saw some questions coming through. Okay. Judy, great questions. I'm going to answer your first one in a little bit and the second one in a little bit as well. So I'm going to come back to those questions. And then another one in the chat is, it all should be bundled in one. How do we pick one and leave another? That is a great question. So I'm going to use my colleague Sarah as an example in this case. So Sarah drives a 2009 Honda Civic, good old Trudy, she calls her. And Trudy's got something like 190,000 miles on her. So Trudy's been around the block a few times, but she's in the prime of her life as a car. Okay. Sarah, over time, realized that as her car got older, depreciated in value, and accumulated more mileage, more wear and tear, the actual value of her car was decreasing such that like her need to continue paying for, high or extra, elements of insurance coverage wasn't necessary. So for example, like it'll come up, maybe let me bring you to my next slide. We'll bring these guys out. If Sarah's car, if she got in a car accident and her car was totaled, her car is not worth very much. In her own words, it's probably worth about $3,000. If she's paying for insurance that has a really high deductible or that is really expensive, but isn't going to pay out and be worth it because her car isn't worth very much, like you don't want to be over-insured. So she made a point to actually drop down in some of her insurance coverage because it didn't financially make sense given the age and condition of her car. Now, those of you who have brand new cars and they have all the bells and whistles and all the tech is really complicated and expensive to fix if something happens, you may wish to have additional coverage. So this is where we talk like about the car itself, property damage here, right? Property damage is getting at kind of what I've been trying to get at, that like your car is worth something. The other person's car is worth something. If you drive into a street light, that street light is worth something. Like, how are you going to be able to cover the costs of your own vehicle that's damaged or somebody else's house that maybe you ran into, right? This is where property damage coverages come in. So we've got property damage liability first up as the subset here. And this is coverage that covers the cost of repairs if you damage somebody else's property. So for example, you run into somebody's fence or their car or the side of a building. I've seen it happen. Never say never, right? That property damage liability is going to help you via insurance pay for those damages. Collision coverage. Oh, and by the way, property damage liability is one of these other minimum requirements in the state of PA to be in full compliance with the laws around auto insurance. Collision coverage is going to pay for repairs to your vehicle if it's damaged in a collision, regardless of who's at fault. So you hear the difference right away. Property damage liability, you're going to have insurance coverage to help pay to repair the other person's car. Collision, is extra that you can pay for with your insurance provider. And if you have collision coverage, you're going to get reimbursed if your car is damaged. Now, this is where my friend Sarah across the hall comes in. Her car is not worth very much. The amount that she'd pay to have this collision coverage just isn't worth it for her because her car just doesn't have that kind of value. That she would end up over time spending more on collision coverage, and it would make more sense in her words to just save that money instead and start to prep to save money to buy a new car. That down payment on the next car she needs to get should something happen to Trudy, right? A comprehensive coverage, that's going to cover damage to your vehicle from non-collision incidents. So we got, my apologies. We got this earlier when in the oh no, you're ruined game that the deer hit you while you were parked. Comprehensive coverage is going to reimburse you for those damages the deer caused to your car. Property damage liability is not going to cover that. Collision is generally not going to cover that because you weren't in motion when, or even if you were in motion, it wasn't a car to car accident, it was car to animal. Comprehensive is also going to cover theft, vandalism, fire, flooding in your car, like water damage, right? Like these other things that can happen to our car, comprehensive. The name kind of gets at it, like it's going to help to cover a lot of everything else. And then towing and roadside service is helpful if your car breaks down. So I actually had my car die not too long ago at the BJC parked, while I was just at work. I realized in checking my insurance, I don't have towing and roadside service added on, although I thought I did. And I thought I did because my husband has that coverage on his car, but for some reason I don't. So you better believe that I sat there and tried and tried and tried to get my car to start and eventually did, had to kind of do some I get a little, roll the sleeves up and figure it out. But I needed to get my car moving because I didn't have coverage and I was going to have to pay for a tow truck out of pocket. And that was going to cost way more than I would have wanted to spend in that moment. So if that's not a cost that you're willing to shoulder, you pay a little bit in towing and roadside service coverage with your insurance to have that option, or to have that save the day option be there. Okay. So as you kind of pick and pull from these auto insurance coverage components, it's going to impact how much your insurance costs on a monthly basis or an annual basis. Generally speaking, the more coverage you have, the more costly it's going to be. And if your budget allows for it and it gives you peace of mind and it feels appropriate based on all those different life factors, then go for it, right? Go for it. And also remember that there are some elements of like legality here, like you need to have a minimum amount of auto insurance coverage to drive in the state of PA, and at least 48 of the other states as well. Okay. All right, let me pause and check in. So a question coming up. When you lease or finance, must you have full coverage and what should those limits be? So when you lease or finance a car, you're taking out a loan. You're essentially either borrowing the car or you are borrowing money to buy the car and then need to repay. And in those cases, there may be really specific expectations laid out per the terms of your lease agreement or your finance agreement, that loan, that stipulate how much coverage you need to have and what type of coverage you need to have for your car. So in those cases, I would absolutely read the fine print so that you know that you are being diligent in following the terms of the loan or the lease, and that you're getting the appropriate coverage you need to also drive legally in your state as well. All right. So then excellent. The last thing I'm going to note on this slide, and then I'm going to try and pick up the pace because I'm realizing, holy cannoli, it's already 12:40. In talking about coverage limits, we got that 100, 300, 50 from the earlier slide. 100 and 300 represent coverage for bodily injury. When you see that third number attached at the end, that is representative of coverage for property damage liability. In this case, that 50 is representing 50,000. Now you can adjust these coverage limits. And when you adjust them, if you increase them or decrease them, that's going to influence your total cost of insurance, whether your monthly payment will also increase or will potentially decrease. Okay. All right. I think we're doing okay. I think we're doing okay. Um, let's Oh, I gotta tell you this though, because I know we got Pennsylvanians in the call. Okay. So the last thing I'll note about Pennsylvania auto insurance. If you are 55 years or older, auto insurance companies here in PA must give you a 5% discount on your premiums. Those are your monthly payments or like quarterly payments you make on your car insurance. They must give you a 5% discount if you are 55 or older and you've completed a Pennsylvania Department of Transportation approved driver improvement course. So if you're curious about that and you want to save a little bit of money on your car insurance and you meet that criteria, hop online and do some Google searching. 55 and older, 5% discount if you can demonstrate you're a safe driver in the state of PA. So not bad, a benefit at that age at least. Sorry for the rest of us who are under 55, we don't get that. But you may actually have, opportunities to save money with your car insurance if you are a safe driver or if you have certain safety features on your car. There's so much more I could unpack, but goodness, for the sake of time, I can't. So let's continue on. Home or renter's insurance. So the idea here is if you bought a house or if you rent a home or an apartment, there are things within your home or the home itself that you want to make sure are protected from theft, from damage, fire, unexpected, a tornado comes running through. Home and renters insurance can help reimburse you for damages in these scenarios. It can also help to cover you and cover the medical bills of an individual who potentially gets hurt on your property. So you've got a friend over. Let's say you were having a party and somebody got a little too wild. Like, if that person gets hurt, you are liable because they got hurt on your property. Having home or renters insurance is going to help, via your insurance, you pay to this person to cover them for whatever happened. Great. Love to hear it. Like, I'm a low risk person. I absolutely have renters insurance. I always have for all of the apartments I've lived in and the current home. In some cases, landlords are going to require it. In most cases, if you have a mortgage, the mortgage lenders are going to require it as well and will have certain expectations about how much coverage you need for each of these two types of plans. Now, here's my action item for you on this slide. If you have not already, go through your home, take pictures, make an inventory of all of your belongings in every room on every level. In the event that there is damage or loss to any of that property, you're going to have to prove both ownership and value of the item in order to be reimbursed. And if you can't do those two things, it's going to be really difficult to get the kind of coverage or reimbursement of costs that you hope for. So please go take pictures, make a list, put it in digital form, keep it under lock and key, and update regularly so that if something does happen, you've got all the documentation ready to rock and roll when you file a claim and say, hey, help me out. Put that insurance to work. Okay. Now let's get on to health insurance. I'm going to try to breeze through this as well, but gosh, I know this is another big nugget of insurance. I'm going to start first with insurance and the federal law, or different federal laws, because there are a couple that influence insurance availability for folks here in the US. First and foremost, pay attention to open enrollment periods for any type of health insurance. Generally speaking, you cannot just go out there and get insurance whenever you feel like, unless you, for example, you meet some sort of special qualification, you lost coverage or you had a baby or there was a death in the family or something like that, then there are opportunities to enroll in healthcare under special circumstances. But generally, every fall is when we enroll or can enroll in health insurance plans. And so we want to be ready for that. Through federal law, we have government-sponsored healthcare. We've got Medicare and Medicaid for older individuals or folks who come from low-income families. And there are rules that apply to those types of programs, who can participate, who can't. Generally, they are affordable in most cases because um, between the state and the federal government and us as taxpayers, we are helping to fund and subsidize those government insurance programs. We also have the marketplace insurance option. So this is via the Affordable Care Act, also known as Obamacare informally, which is why we've got a picture of Obama there. Via healthcare.gov, and I'll go ahead and plug this link in for you as well. You are able to, if you are not otherwise covered by an health insurance plan from your provider, you're able to hop onto the healthcare.gov website and choose a plan based on your need, like level of health insurance coverage you desire, as well as affordability. It can include dental coverage, and there may be subsidies available. So, for some individuals, finding health insurance through the marketplace can be very affordable. What generally is not super affordable, I get to my last note here, is COBRA. And COBRA, I am definitely forgetting what it stands for. Ombudsman is in there. I apologize. Oh, Consolidated Ombudsman Budget Reconciliation Act. Wow, glad I remembered that. This federal law requires that you have access to continued insurance coverage after you've lost your job or had reduction in hours and loss of coverage. You can get that extra, coverage for up to 36 months, 18 or 36 months, assuming that you enroll in Cobra within 60 days of losing coverage. But know that, like, if you have Cobra, you are paying the full price for your health insurance to extend beyond your termination or your voluntary departure from your job. So, for example, just so that you all get an idea, if I lost my job at Penn State or I up and left today and I wanted to continue my health insurance coverage through Cobra, right now on my own, I pay $41 a month in insurance costs. Penn State covers about $660 of that health insurance cost. If I left or I was dismissed and I opt into Cobra, I'm going to be on the hook for about $700 a month in health insurance payments for up to 18 or 36 months. So Cobra is a nice, it's a backup, it's a safety net, but it's not cheap. So it is not a place that as you're like thinking about health insurance for the first time. I heard something about Cobra. Is this where I start? What is this? No, it's not where you start. And generally, it is expensive. It might not be the next step that you take after you maybe otherwise lose insurance coverage. So a lot to unpack there. I can't the whole way through. I'm sorry, but let's keep going. Let's get into employer sponsored insurance. Okay, so a lot of you are Penn State staff and faculty in the call. Penn State provides health insurance to us. Those of you who are in undergrad, you're going to get into that full-time job soon. You're going to have, in many cases, insurance offered as a benefit. Some grad students have worked full-time in the past. You know what this is like. It is a benefit, so you can choose to enroll in it, but you also can choose to decline it. There's usually some stipulations on what would allow you to decline it, but that is potentially an option. When you have this type of insurance, like I mentioned with Penn State, your employer is helping to cover some or all of the costs. So Penn State helps make it affordable for me to have health insurance with them. I'm really grateful for that. The trade-off is there's usually limited choices through health care plans offered by employers. So in this case, I'll talk HMOs and PPOs, these health maintenance organizations and preferred provider organizations. Here's what you need to know. If you are in a full-time job like myself, every fall you're going to be asked whether or not you'd like to have an HMO or a PPO. And when you decide either, you keep in mind that they vary in cost and they vary in functionality and certain benefits. So, for example, HMOs usually require you to only have to pay a smaller out of pocket cost. So, like, it's not very expensive to have. For context, I have a PPO and I'm paying $41 a month here at Penn State. HMOs are probably going to be less than that. But it's a little bit more rigid of a plan. You can only work with certain doctors in their network. You need to have a referral to see a specialist. So there's a couple more hoops you jump through for that cost saving in a month to month basis. PPOs are going to have higher out of pocket costs. So I pay more each month and I also have to pay more out of pocket before insurance kicks in, but I can go see any doctor I want and I don't need a referral. This is generally a desirable plan for young people who don't have a lot of health issues. Um, yeah, I think I got that right. I hope I didn't mix anything up. If I did, please let me know. I feel my my brain is starting to go, you've talked about too much insurance at this point. Yeah. No, I think I'm mixing it up. PPOs have the lower monthly cost, higher out of pocket. HMOs have a higher monthly cost, but lower out of pocket. Whew, okay, we're getting through this, guys. An added note here, those two types of insurance plans, HMOs, PPOs, they come with tax-free savings accounts for healthcare expenses, which is really cool. We call these FSAs and HSAs. Now, something like a PPO, that high deductible health plan, we call it, that's going to come with a health savings account in blue. Okay. So, what's cool about that, I have an HSA. I can contribute money to my HSA tax free. That's before I pay tax. So, I save a little bit of money. The money in that account can be invested or I can use it to pay for healthcare expenses. So, I save a little bit of money because it's pre tax money. Flexible spending accounts don't require a specific plan. So if you have an HMO, you can have a flexible spending account. But the deal is the money you put in that account each paycheck, you got to make sure you use by the end of the year. Usually a little debit card you get, or you can, submit for reimbursement if you buy things without the card. But whatever you put in, you're not going to get back. So like a couple of years ago, I had an HMO with a flexible spending account and it was like December 27th and I was at Sam's Club buying as many like vitamins and toothpaste and medical related things as I could to make sure I used up the money in that flexible spending account because I wasn't going to get it back as we rolled into the next year. So definitely something worth researching more. Again, I'm giving high level overview of this. Okay. And I think for the sake of time, I'll just give a nod to life insurance. I'm not going to go in too deep with it, but the idea is that, like, if you pursue life insurance, it's a contract that you set up between yourself and an insurance company. You're going to pay monthly for it. Sometimes it's expensive, sometimes it's affordable. But the benefit is that when you, the insurer, or the insuree passes away, a lump sum payment, it's called a death benefit, is going to get paid to a beneficiary, which could be like a spouse or a child or whoever you designate as a beneficiary. Which, if you are somebody who is married with children, you have a home, a mortgage, you've got like really big financial obligations, and your death would cause financial hardship in or for others, having life insurance can help to alleviate that or prevent those financial hardships from happening. There's term life insurance, there's permanent life insurance. It gets a little bit deeper beyond that as well. I encourage you to do some research on it, especially those of you who work here at Penn State, because Penn State does provide up to $50,000 in free life insurance coverage just for working here. So make sure you have your beneficiary identified should something happen. All right. So then let's get into the two last spaces of information here, or steps in the insurance planning process, I should say. It's time to go about insuring yourself and getting the coverage you need. Shop around, compare plans. You can get quotes when possible so you know how much it's going to cost you before you agree and sign in on that insurance contract. Please note that your premium, when we think about what is a cost going to look like, premiums are the amount of money you pay each month or quarterly or every 6 months or annually for that insurance. And in some cases, depending on the type of coverage you have, you'll have a deductible, which is the amount that you pay out of pocket before insurance kicks in. So in one example, I used to park in the hub garage here right next door to my office. And one time my car got hit by somebody and they didn't leave any information. It was a hit and run. Okay. Called up my insurance, filed a claim. I had to pay $500 in a deductible. And once I paid that, insurance covered the rest. They covered, getting my wheel replaced, the bumper replaced. It was a whole hot mess. I got to tell you, somebody really did a number on my car. But that is how the deductible played in for me. And after the fact, which was really cool, because I have teacher car insurance, and because my car was hit and damaged on school property, I actually then got reimbursed for that deductible. So I eventually got that $500 back as well. So it cost me nothing except my monthly premiums, what I pay each month to have car insurance to get my car fixed. I was pretty grateful in that moment because it was like 2 grand to fix my car, and I didn't have 2 grand to fix my car at that time. So, whew, this is how insurance saves the day, right? If you need help, there are insurance agents and insurance brokers out there who can help you find the right coverage and get enrolled. Agents are usually more helpful if you already know the plan that you want and you just need to get enrolled. Like you need to actually fill out the paperwork and get going. Insurance brokers are going to do some more legwork for you and they're going to investigate and research different plans and policies and coverage levels to make recommendations to you and help you move forward from there. Make sure they're licensed, know how much it might cost to work with them, and proceed accordingly. And keep in mind, I mentioned earlier, your budget matters in this way. Like as you decide on coverage and you start to, enter into these insurance agreements, make sure that your budget can accommodate these payments. It might need to shift. Those of you who are about to graduate, you may be taking on more insurance coverage. As you get to 26 and you lose healthcare coverage from your family, like you're going to need to opt into your own. In many cases, your budget may have to adjust to accommodate those new monthly added payments. And it's also worth noting that like you could also save in your budget in paying for insurance by avoiding risk or reducing risk altogether. So for example, don't smoke, not a guarantee in life, but if you don't smoke or engage in high risk activities, that decreases your likelihood of like getting sick or having high healthcare costs or maybe having the need to have um, increased or premium level insurance coverage. Same idea, wear a seatbelt, buy a fire extinguisher. These things could help to lower your overall insurance costs or reduce the need to have certain types of insurance. Except you do need auto insurance. Even though you wear a seatbelt, you still need car insurance. So let's wrap up. Oh my gosh. You all have been great. I hope you're still with me here. There's so much information. Last but not least, put your insurance to work. If something happens, you get sick, you're in a car accident, put your hand under the lawnmower and you try to figure out what that sound was. Get that accidental death and dismemberment insurance. It's time to put it to work. If you need to file a police report, do so. You usually will need to file that report if there is an issue with your car, a car accident, for example, your car was hit. Review your insurance policy, figure out what's covered, figure out what's excluded, file a claim online, in person, or by phone. This is you making a report that something happened and you'd like reimbursement for it. Many of us can just do this from an app on our phone nowadays. And be prepared to talk to somebody called an insurance adjuster, especially in the case of car insurance. It's their job to be like Sherlock Holmes and figure out exactly what happened, how much insurance should pay, and if they should pay at all. So they're working for the insurance company and you, but if you don't like what the insurance adjuster has determined, you're welcome to dispute your claim. If you feel like you were um, denied unfairly, or if you feel like what insurance covered in terms of reimbursement costs was less than what you were actually owed, you can totally file a claim, and you can dispute, put in a request and dispute the claim to try and seek justice in your own way. Okay. If you just search online, like, how do I dispute a claim? You'll find plenty of information guiding you. And you'll also find rules for disputing claims within your insurance policy. Make sure you read that. All right. So to conclude, I mean, my office is here. We're here to talk about insurance if you really have questions and need support, but we're not going to be the most expert people out there who can guide you when it comes to insurance. I encourage you to get connected with your state insurance departments. There is a PA state insurance department. I've got some of that information here. Get connected with advocacy groups, Pennsylvania Health Access Network, United Policyholders. These are nonprofits that help to advocate for consumers. If you're having trouble with your insurance or you feel like your insurance is not serving you appropriately or is acting in bad faith, you could certainly pursue legal resolution as well. And here at Penn State, students have access to student legal services and lawyers who are on staff. Know that there are resources out there to help you get the information you need when you need it, including us. So I've got my website here, or our website, in the QR code. If you want to make an appointment to meet with us, students, you can on Starfish. The QR code is here. Staff and faculty, alumni, we can try and support you as well. All you need to do is email finlit@psu.edu. Just a note about upcoming events. We've got some excellent things happening for Financial Literacy Month in April. We've got a sports gambling panel and a book read. So more to come on that. Just a small preview for now. Otherwise, I am going to wrap us up. Woo! That was so much. I really appreciate you all hanging in with me here today. Holy cow. If you've got questions, empower yourself, get on Google, do some research using the terms that I shared with you today. Connect with us or connect with others across campus and outside who can help you better understand insurance and how to insure your future so that you are not in a bad spot should the cat set the curtains on fire in your house, right? Which honestly could happen. Cats are very mischievous. So be in touch if you need anything. Our survey is there if you want to let me know what you thought about today's session. Coming up in 2 weeks, we've got public service loan forgiveness, same time, same place. So please register for that. That is due to be a great session. Everybody who works at Penn State is eligible for public service loan forgiveness, so you don't want to miss out. And also, too, a reminder, if you're here from SMEAL's Ethical Leadership Challenge, we're going to send over your participation info to the program manager. So we got you. One more time, my name is Sarah. I need to go take a break because, wow, that was so much insurance for 1 hour. You guys are great. I wish you all the best. Good luck in your pursuits to best insure yourself for the future. Thanks, everyone. Have a great week.